Hey guys, welcome back. I hope you had a good weekend. Monday, August 16th. What a beautiful, beautiful day in the stock market. We're going to talk about the market overall, kind of what's going on, talk about some GME specific stuff, some of the ridiculous different options I'm involving myself with on Gamestop, and how stoked I am and why, based on price action. And the charts: sub up, like up, comment down, happy money sticks around. That's our Twitter at happy money YT. Got a Discord too if you want to jump on there. Market today, I think it kind of sold off with a little bit of the scare, Afghanistan, international news. Opened up pretty low, looked like it was going to be bearish. And then actually you can even see it on here on the 5 minute. Typically I don't like to use the 5 minute for too much of the divergences. I feel like they're much better suited for longer term, but you can actually see it on here pretty easily. Here's a low right here, the low RSI, and then a lower low, higher RSI. And that's actually not lower, so it's just twice. But here's another pretty low, not quite as low. RSI is higher, so RSI is picking up. This was coming down these two times, and then you have the MACD crossover. I almost got calls today on SPY, just dailies. I actually had them even queued up. They actually would have been 1,000% play. I didn't. I had other plays I was setting up and just didn't mess with it, and thought, it might actually properly start correcting. We might actually just have a sell-off, and then it just flat, and for once not just mega bounce and hit all-time highs. Many all-time highs broken today. Just look at this bounce, it's so epic. On the daily, it's more bullish than it was yesterday. We've got a big body green candle, big candlestick down here. MACD's pulling away. We're still nicely over the 9 moving. Volume's pretty light, very light, so as you know, that means it's not as strong of a move. But this move hasn't been strong really since 2008, and more recently just in the last, once we separated, let's see, where was it? Right here. Was it here or here? One of these spots were kind of kept grinding out. I think it was here. So this from here up was like just some of the bigger heavy hitters in the SPY that kind of have just been pulling it up. The rest of the SPY has kind of corrected from here on, which was January, February, I think it was March. I think that was the spot right there, right? Yeah, I think it was here. So I saw a chart showing kind of this divergence from kind of the big heavy weighted stocks in SPY, and then the rest of it's kind of flattening out. But anyways, we're still due for a correction here. We've got a MACD divergence here, as well as an RSI divergence here. So it looks like, but that's not going to hold much weight now, because now we have new highs and our RSI is actually higher from this one. So we could, I don't know, just gotta wait on that. So that's the SPY. Might be bad in the after hours. I'm thinking still September could be the big correction, big crash, beginning, the middle, the end. I think we'll see it in September. And we might start coming down before then. We could start to be bearish for a bit before then, and then kind of in September it really starts to accelerate and crash. It's not always just like a peak and then crash. It'll kind of waver and taper and then correct. So here's 99, there's 2000, 2001 kind of dot-com bubble, kind of crash, and then it just kind of slowly went down. I guess this was probably the most volatile time right here where you can make the most money, or here, was pretty violent. 2008, kind of the same deal. So we kind of had a top and then a double top, and then it just kind of went bear market for a while, and then it actually crashed from these like 4 or 5 weeks. It's on a weekly chart now. And then COVID was kind of a special crash, just because it was like the fastest, most. There's a lot of stats that actually, a lot of records that were broken for the COVID crash here. But this was, yeah, as time progresses, our market's just becoming more volatile. and basically moving faster with just high frequency trading, and just everything's moving faster. Sentiment's moving faster. It's just swinging more. So crashes are quicker, corrections are quicker. At least for now. We'll see. Once we have a big major kind of correction crash that seems like it's probably coming. Maybe back down to this 213 or 152, but who knows how long that'll take to kind of get us back on a more sustainable trend line. Probably closer to this 211. Yeah. GME today looking beautiful. I am stoked on this, and it's a little too prevalent, or yeah, it's a little too obvious in my portfolio because I did open up some plays today. Yeah, so on the hourly, this is kind of what I was saying might happen. Just kind of this grinding up, consolidating, some green, and just, yeah, low volume until we really see it rip. And we're getting exactly that, just some green, a couple volume pops with some green price action during the day and then down, but overall it just ends up being a pretty much kind of a grinding consolidation up. But today was the big day for me. As you can see right here, I've got this downward angle line right here. Just touching resistances here and here. And as you see, we broke out of that today. And then even on this wick today, we had a pretty massive rally this morning. We broke through this resistance, albeit it didn't hold up there, but the fact that we broke through it is, I am very confident now. Confident that this 145 is a low, and start setting up some bullish plays that basically have us above 145 or even 155 or 160 or however aggressive you want to get. But we could come down a little bit, but again, with what we're seeing on the MACD, RSI still happy, and us actually breaking that resistance. I predict by the end of the week we will fully break through this 166 resistance with a body. Most likely test this 180 resistance and maybe break through that even. Let's see, today's Monday, so we could see, I don't know, I feel like we could see a 180, and then it might come back down though before by week's close. But just kind of staying in this range. And then next week, yeah, next week I've kind of moved my time. It's based on two different things, a lot of different things actually for catalysts on dates. If you're just looking at the chart, it seems like we're about right here. So that'd put next week at the end of kind of the consolidation, grind up, and then a rally by the final week, which is kind of what, or no, next week is the final week. Oh yeah, yeah. So this might be that final grind up week, and then the next week, last week in August, might be this right here. Just looking at the charts, that's kind of what I'm thinking. However, there is other theses about the basket of shorted stocks that has their rotation period, and that won't come until the 3rd. Got a lot of catalysts for September being a market crash, as well as we've got GME earnings, I think, on somewhere up here next month, early next month. We've got one more catalyst, which we've got a lot, but the one I'm sharing is this one. Oh, I put it in DD. This is our Discord. I don't know why it maximized. This one, yeah, they changed the margin requirements for the 005 NSCC 005 from 10,000 to 250,000 collateral. So increases the fixed amount of collateral required for those members. This even in this approval letter, this may impact the budget constraints on the smaller cap hedge funds. So basically, accelerated approval of the proposed rule change as modified by partial amendment number 1. Is it saying here? One of the things I read said this will probably cause an increase in margin calls. So that's pretty crazy. So this is coming into play September 11th, which is kind of insane. Market historically has crashed in September. Pretty much every crash we've had has been in September. GME's negative beta would would make you think that GME is going to rip during that time, as well as just the huge short position here and the long positions on the rest of the market. If the market goes down, GME has to go up just to keep margin at bay. That is the way. And technical analysis would point me to maybe sooner than that. And maybe what I'm seeing on the chart and what I'm thinking is we have this rally to 350 in this last week, or possibly in the next week that stretches into the first week of September. And then the next week, so typically GME sells off after earnings, and it's possible that these earnings, there'll be a huge announcement along with the margin requirements and all this. This might be the first earnings in I don't know how long where GME actually rallies and rips, and that would be huge. So I'm thinking 350 by the 10th at the latest, maybe by the 3rd, and I mean maybe even by next Friday. And if it does happen before the 10th, I think by the 10th, it might not be another peak. This might be literally the beginning of the squeeze. Because if we hit 350 and then we have all these other catalysts in the next week, it's possible it keeps going. So yeah, fired up about that for sure. And yeah, TA on it is looking good again. And I'm just, once we hit 350, I just want to see what happens there. That's basically what we're waiting on. SPY kind of coming down here a little bit. We've got 20 minutes to close. GME kind of coming down a little bit. Again, nice little beautiful chart here on the hourly. Just nice grind up, higher highs, higher lows. Even broke through this resistance back here. MACD is looking nice and clean. All is good. All is good right there for sure. Daily too. It's looking nice. Yeah, I like it. I like it. Right back here, it was kind of crazy this morning when we were ripping. We were actually inversing the SPY quite nicely. If you look right here, it's what, 1030? No, yeah, 1020 right here. Big red, and I was watching. I was like, oh, we're SPY inversing pretty well. Big green. This thing was just spazzing out. It actually grabbed some volume just from the rally here, and then this, what, 1040? Yeah, not so much there. It was earlier too. Let's see this. Even here, these three candles, 1015, 1020. Where was that? Here? Nope, wasn't inversing. It totally was inversing. Option plays. So I'm trying to figure out how much. I was talking to Coogan in our Cognoggin, our Discord, trying to figure out the most leverage I can with options. I've got shares. I've got about 95% of GME in shares. Options is just some on the side for some extra gains. And I think this website's pretty good. Options Strat. It's Options Strat or optionstrat.com, and I have it shared on our Discord under trading tools. So I put all the different tools I used under here. There's Tasty Trade. Is the German GameStop market yield curve, failed deliver cycle, maximum pain, GME stock, eyebrow desk, another options profit calculator, Finviz. Kind of keep adding to this and taking away some stuff that's obsolete or not as good. But this one seems to be pretty good. So it's basically calling for a 250 call with, if you have a target price of 350 on GME. If you want the most return, most risk, basically. So it's kind of nice. So if you basically bump this up to, say, if it was 500, you think by September 10th expiration, it would put you at the top call, 325. But what's interesting is if it's 350, it doesn't have you at the 325 call, because you're paying more premium than it's worth to pay for the 325 call. So this is as high a call as you need presently to get the most return. And that's kind of where the leverage comes in. The leverage is it's the delta times the strike price divided by the premium you're paying. So I think this is pretty much doing that for you. It's also cool because you can get spreads on here too. And I actually opened up some of these. You can open up the visualizer. So what I'm trying to do is just sell some premium to cover some of these long positions that are a bit more gambly, and while I wait. So GME, even if we do I don't know when it's going to get volatile and actually like a lot of premium pumped into calls. Today, yeah, it happened here for a bit, but it's nothing crazy. So the calls, if of course if you're in the money, it's different. But if you're out of the money, your calls, if you're too far out of the money, not enough time, calls are just going to lose value even though we're coming up. Now, if you wanted to do spreads, or I'm just talking long calls, just long calls. So I'm kind of waiting until we get more volume, more velocity. I'm going to be paying a premium at that point. However, if that point doesn't come for a week or two, then I'll be losing a lot of premium by that time. So for now, I'm setting up a couple little debit spreads and maybe scaling a little bit to long calls, but really until it's ripping, those are going to just get decayed with time. So you can see my ones. These ones expire on Friday. These 340 calls, they're pretty much worthless now. And the ones for next Friday, they've lost value, but I still have hope for them. There's 2 Fridays. Yeah, it's September 3rd. So these could be really good. But these are down 43%. And they were down more. They came up some today, but if the price action, when they're not far out of the money, if the price action is not fast enough, your calls are just gonna lose value. So let's try to look at it on here. Yeah, you can even see this is 8-9. So this thing's just lost value. Over this weekend was bad, even though we're up today. So the spreads I got, it's really confusing to see because I'll put a spread in here and then it'll add it to another position. So it's kind of a mess, but basically I have put credit spreads for this Friday, just trying to collect some premium, and they are, let's see, are they in here? Yeah, they're all messed up. So it's these, no, 210, those are the ones I'm rolling. Yeah, it's this one. No, 160, 250, nope. Down here, 11. Maybe I didn't get any for this Friday, actually. 62.5. Yeah, because that's 11 days. Anyways, I think I opened up some. We'll see when it comes closer to expiration what's going on. And then it made some of them covered calls for me, which I wasn't really trying to do. So I can change the leg on here so it's on top level. I can do spread level or leg level, but it still combines them, kind of annoying. So it's a little less easy to see what's going on. But we're doing all right today. GME's coming up. So basically, if GME, I think I have it closing above 165 on Friday, we'll be able to collect, I don't know, 1,500 in premium. And that'll help cover these debit spreads for, so I did these for September 10th. So that's kind of the date I'm scaling to. Is a 310, 325 covered or debit spread. I made some of them covered calls, but I'll close those out. So this one had good ratio, 1-53, basically leverage if I'm not mistaken. So $222 to get into it. Max profit's 11,000. There's not a whole lot of room for error. I mean, GME's got to be up here to get max profit. 326. Well, yeah, 332. It's got to be high for max profit, and that's, you can see that over here on here. So 280, 325, is that kind of, I think that's the same one I did. I did a 310, 325, so even more aggressive. I think I did a 280 also. Yeah, but if you open in the visualizer, you can see if you want to have it safer, so you don't have to be this high at expiration, makes as much money, you just, well, you lower your lower strike. So instead of a 280, you'd bring it down 225 or whatever. But I was just looking at maximum leverage. So this is 3,600% return on risk, and this is all based on expiration. So you, of course, I can close these out and probably will close them out before expiration. This one is capped since you're selling a call as well. This long call is not capped, and so these are good for the actual squeeze once it goes past 350. Just long calls, but if you are buying these when it's at 350, they're going to be extremely expensive. Timing. Anyways, let's see, GME, come down a little bit, hanging out on that trend line, no problem whatsoever. Let's see what we did on our history. I did close out ORF. I bought HYG. This is for market crash. HYG September 17th and October 15th, the monthly expirations. These are $77 puts, $77 strike. I got quite a few of both of them. Sold the Nautilus shares. Here's credit spreads we opened. I bought RKT calls for September 17th. They had good earnings. They sold off. I think they're gonna have continuation. They might be doing a share buyback they've talked about. They've got a heavy short interest, even though it's not seen. They've been suppressed heavily. They're now offering refinance on solar panels, or not refinance, but basically financing on solar panels, so that you can combine it in with your mortgage. A lot of bullish stuff on this. Is pretty far out of the money, but I think if we start to see things squeezing because of margin, I feel like Rocket will be in there with them. Here's more GME stuff. More Rocket calls. How many Rocket calls did I get? Holy smokes. I'm pretty excited. Yeah, I got 36. Not a whole lot of premium though. They're pretty far out of the money. The premium on these it's not bad. The IV is not crazy. These are 28.89, which right now seems way out of the money. And it is. But this thing could rip pretty easily. These ones I opened up a while ago. So yeah, more exposure to Rocket. And then, yeah, HYG, I'll show you these. So I was looking for basically low IV stocks that typically don't move, that will do very bad in a correction. And banks are typically pretty slow movers, low IV. So that's why I've done some bank puts. HYG is an ETF, and I can show you kind of what it did during COVID. High yield corporate bond. This is what it did during COVID. So as you see before that, though, it's just flat, and IV on it's real low. Mine are way out of the money. So, you know, it's a small risk. But if it pays off, it could be huge. I don't even know what 77 puts. Okay, 77. So I picked 77 really just looking at the option chain. I could just get it a little bit cheaper, and I do that oftentimes if I don't have an idea of where I want to get a strike. 77 is nice though. It's way up here. I mean, I would have been fine if they're even 67. So these could get in the money if we have a pretty serious correction. Half of what COVID did, and this actually wasn't even an ETF, I don't think, before. So it actually came out in 2008. If this is right, I'm not sure if these charts are right, but it was at 106, came all the way down to 61 for the 2008 crash. And this is COVID, so yeah, we'll see. The way I did the options was I just looked at the chain and found not a discrepancy, but just someone that was trying to get rid of them for cheaper, pretty much. Just looking at the ask on here and then finding where there's kind of a, so even right here. Wait, what am I looking at? That's calls. Puts. Yeah, here we go. So you can see the ask on here. So 19 cents, 15 cents, 13, 12, 10, 10, 9, 10. So see how that works? So right now I'd be looking at this 80 strike. And you could just give them the ask. I mean, I put in a bid for 9 cents, but you probably wouldn't get it unless you were 10 cents. But then look at these. I mean, they're asking more on these, and you know, you might not get filled on this unless you give it 10 cents. So you're already getting a deal there. That's one way I look at option chains, and then you can kind of at least feel good right when you jump into them, because these are actually 0%, not down. And they were up earlier. That's what I got for you guys. Thanks so much for watching. Sub up, like up, comment down. Happy money sticks around. See you tomorrow. Peace out.